Good morning, everybody. I'm Ed Parcaut here with Mike Kelly. We're Real Estate Jerky Daily.
Every day.
We're
Monday
supposed
through
to be every day, but sometimes happen.
Sometimes things happen, like when Thanksgiving happens next week.
Or when I'm gone for a week.
Yeah. It's a good gone, though.
I know, but you could do it, but you're like, I don't want to. Give somebody to have to run it. All right.
I don't know
a lot
how
of news
to do
today.
it from my phone. It would look like crap. It sound like crap.
You could set up your whole, you could, spend $300.
Thousands of dollars.
No, it's not that much. I wrote a
set up a
podcasting
studio.
course, and I have in there different levels of equipment. And you can do it for $300. Really good equipment. Then if you want to go to the next level, it's 600, and then after that, it's 1,000. So
I'll do it in the same room that Karen works in every day for Gallo.
No, you just go out in your garage, that one where the TV is and the refrigerator. Just put green screen stand back there, and you just use that TV as your monitor.
There we go.
You were good to go.
Yep.
I mean, nobody would bug you. Hun, I'm going to the store.
It won't be cold.
That's what you wear. Put a sweatshirt on like we're doing, because this room is freaking cold. But anyway,
it's not bad right now.
It's good for the equipment to be cold.
It is.
All right, let's get on to the stuff. So this week, our inventory grew. I mean, it is so much this week. I guess they surged.
That growth is amazing.
By 456.
Period.
That's right. We were negative by 14,000 last week nationwide. So this week we're up by 456.
So that means we kind of gained about 15,000?
No, because it goes off of what last week number was.
Oh.
It doesn't like go to the week prior to that and add it. Yeah.
Okay.
Yeah. It's just it's whatever. So whatever it was last week, we're up 456. The National Association of Housing Building Market Index came out today, and it increased by 3 points to so it went to 46 from 43. Anything under 50 is still contraction. Right. Yeah. We talked about this before.
Builders don't want to build.
Correct. Even though they're so much more optimistic about it, they are not really looking at doing it. I guess I missed some. Oh, there it is. It's down here. I just didn't move it up. If you look at the current sales increase, that means what their sales are up to 49. Sales expectation increased to 64. That's a good number, because that's above 50. So they're expecting sales to keep going. However, buyer traffic only increased by 3 points to 32. So they need more buyers, and they need to sell more stuff.
And these are new homes.
New home sales. Yes, that is correct. Cool. Which we can't do anything until we get new home sales.
Right. Got nowhere to go.
Housing Wire researched the housing market. Housing Wire is the one I go to all the time. I get a lot of news from, and they did a market forecast. And they dropped a whole paper on it, and I went through it and I read it all. And here's basically what they're thinking in 2025. Interest rates are going to go between 5.75 to 7.25. Why don't you just say you have no idea?
Range.
Yeah, I have no idea. They think inventory is going to grow by 13% to nearly 800,000 single family homes, even though our average is much higher than that.
Mm-hmm.
Let's see what else I have here. They're thinking there's going to be less competition with homes. Because the rates are still going to be higher. There's going to be other stuff, pressure. There's going to be some type of pressure on home prices. I think it's going to be, with all the changes that's happening in the government, a lot of people are going to lose jobs or do something else, and there's going to be not a ton of sales more, is what I'm trying to get at.
That might mark a little downturn in inflation on home prices.
Correct. But it's not, but they're saying it's not going to make it go down much.
No, it can't.
They also, Housing Wire estimates that in 2025, will expand over 2024 for a total of 4.2 million in sales, with only a 5% increase of homes over the next year.
Wow.
That's not a lot.
Not much.
Yeah. So let's do anything again.
5% of a small number is a small number.
Yeah, it is. So let's see here. Over the past 2 decades, home sales have averaged 5.55 million. What is that? 5.15 million per year. During the years of inflation, the housing bubble sales were as many as 7 million in 2005, because we had that huge bubble of homes.
I remember those days.
But on average, the sales until 2013 were 4 million a year. During the pandemic, that rate exceeded 6 million homes in 2021. I did not know that.
I didn't either. But it says it right there, so it must have happened.
Well, and all right. So now we got other people. What are other people saying? NAR is saying that they're not as optimistic about it. They're thinking that the estimate is 4.9 million, which is, I guess they're Oh, they have a much more optimistic view because there are agents,
Yeah.
right? They always think it's going to happen better than whatever.
Well,
They have, this is what they're thinking. 4.9 million,
as opposed to
4.3 million that
okay.
the other one said, and that's a 22% increase nationwide.
Don't forget that half.
Well, that's whatever. And they're thinking, and so, but they revised their forecast for this year down to 5.5 million. But like many forecasters, NAR was surprised that home sales recovery didn't happen in 2024. Yeah, shocking.
Really?
Yeah, shocking.
Let me think about why.
800,000 jobs that didn't happen.
I always thought it was 1 million.
It's close enough.
Liars.
They think interest rates are going to, be closer to, I don't know. I had it in here, but I don't know where it went. Anyway, move on. MBA, so Mortgage Banker Association thinks that the estimate's 4.3 million, so closer to what the Housing Wire Index thinks. That's a 6.5 increase over the 2024 market. And where are there? And they think rates are going to be between 5.9 to 6.2, a little bit closer range there versus 7.25 and 5.25. But it's just going to take time. Goldman Sachs is thinking that it's 4.2 million homes are going to be sold. Fannie Mae is thinking 4.5 million homes are going to grow. So nobody has a clue.
Yeah.
Basically, bottom story.
Well, it's going to be more than 4 million is what they're thinking.
Yeah, it's more than what we did this year.
Yeah.
But we don't know how much more until what happens with rates. So it's all going to depend on interest rates.
Yeah, I like the interest rates where they say between 5.5 and 7.25.
Yeah. 2-point move.
That's like a brand new realtor when he goes and he tries to do a market analysis on a home. He says, well, it's worth between 150 and 325. I just can't put my finger on it.
However, if you're there's a renter versus homeowner, there is a huge growing disparity against if you rent versus if you own a home. And I don't mean because they're picking on you. I'm talking about if you look at 2019, the net worth of a renter is the homeowner had 40x times the net worth of a renter. So that's 295,500 versus 7,300.
Yeah.
In 2024, that thing is 42 times the net worth. So that's 415. That's huge difference. And
look how little they increased from 7,300 to 10,000.
Right. Well, that's barely anything because that's what they're saving on their payment. The absolute level of net worth growth impressively for homeowners during this period of time, because you got to remember in 21, 22, and 21, 22, we actually in our area went up 66%. So that's where the biggest move was. Right now, the affordability has gotten worse and caused the median age of first-time homebuyers to rise. Just 3 years ago, they were at 33, and now it's risen to 38. So what they're saying is don't just focus on the young people when you're trying to do your marketing. Focus on the little bit older people.
5 years older.
Well, hey, 38.
You
almost 40.
Almost 40-year-old.
And then I saw on annual income needed to afford a single family home in 2019 was $56,800. Today it's $107,700, and that would be the nationwide affordability. And I think that's 422,000
on your side if you're not making over 100,000.
Well, that's just inflation and rates.
Yeah.
If rates dropped, we would be lower than that. But we can't control that.
If my aunt had cojones, she would have been my uncle.
All right, we have October starts and permits tomorrow to see how that's going.
I'm excited
Mortgage
about
applications on Wednesday, existing home sales on Thursday, and initial jobless claims on Thursday. Not a ton of news this week to move the market. We're not going to see that. We're going to I think we're starting until we see something major. This market's going to be here. Rates are going to be here. So don't expect to wait. Just get in the house now and refinance later.
Exactly. Well, we've been saying for a year.
But the difference now is there's a positive of the market. So what's going to happen eventually? Everybody's going to be making more money.
Yep.
Taxes are going to be lower. All those different things are going to happen, and I think everybody's happier now than we were. I mean, if you watch the UFC the other day, how ecstatic they were to see President Trump. Elect President Trump.
Well, except for those 17 blue counties where all the population is.
I guarantee. Yeah, but you got to remember, most of these people, there's only 1% of that demographic who hates Trump.
Yeah.
The other ones just think they need to vote the way they do, but they're getting more towards the Republican Party is no longer a Republican Party. They need to change the name of it. It's inclusive. It's an inclusive party.
Just wonder where those 14 million or 15 million votes went.
They were extra.
Where did they go?
That was that meme where, oh, Dominion, I need your help. Remember that meme? She's like,
you're our only hope.
Yeah. Obi-Wan Kenobi.
Yeah. Oh, you screwed the hope out of everybody.
Yeah. Well, I'm just glad maybe we'll get some things fixed. I even put my resume for the new Deutsch job.
Good.
Did you hear
they're looking for
people to help them with that job?
Department of Government Efficiency.
Yeah, they're like, send your resume in through X, but you have to have a verified account to do that.
In X?
Yeah.
Oh, well, that's easy to do.
Oh, my account was verified already.
Yeah, I think I'm verifiable.
Pay $14.95. Everybody's accounts.
I'm not a bot. I swear. Here's my $14.95.
That's right. I'm paying you. I'm real.
Yeah. Interesting.
And that's where we are. And
I don't know why CAR hasn't updated their numbers on the weekly chart. Like here's what realtors did, here's what they're thinking they're going to do, and here's what they want to do.
Well, there's always later in the week. We'll keep watching it.
I'll keep watching it.
Worst case, we'll do it Friday and then we'll just be caught up for this week. Hopefully.
There we go.
Yeah. All right. That's all I have for today. Not a ton, but really basically it's still stating stop waiting. Go help your clients get into a house. You can negotiate right now. Remember, in December, in the year, there's the 10 best days, and we'll get this chart for you. 7 of those days are in December, so you should really be looking at getting your clients into escrow in December. If not before then. But I'm just saying, Thanksgiving is a good week to get them in. Also,
is Pearl Harbor Day one of those?
December 7th? No.
Oh, bummer. No. Is the 24th one of those?
26th is, 24th is.
Okay.
Yeah, we'll get the list. I got to find it.
It's a good list. It's an interesting list.
I'll just ask ChatGPT to find it for me.
Go do this. Yeah. All right, everybody, make it a great Monday. Go out there and list and sell. Increase these numbers.
We need you.
Through the efficiency of being a very good realtor and lender.
We need you to increase the numbers.
Obi-Wan, you're our final hope.
All right, everybody, make it a great day. Thanks for being here.
Bye, kids.
All right, bye.